how to profit. So last night for myself personally, made over $23,000 US, as you can see here. My daily summary on the 28th of November, 22,900 USD. Why is that not sharing? Entire screen. There we go. So you can see that right there, right? Making over 22,900 USD. These are all the trades we took last night. We took silver. We took some gold. We took some silver. So 4,200 US, 5,700 and 13,300 USD there. And this is basically everything I'm going to be teaching you tonight on trading support and resistance. Okay. So if you don't understand anything about trading stocks, crypto, Forex, then this will help you not get wrecked. But other than that, yeah, hang around. So just a bit of a risk disclaimer. Please be advised that I'm not telling anyone how to spend or invest their money. Take all of my content as my own opinion and at your own risk. I assume no responsibility or liability for any errors or omissions in the content. This content is for educational purposes only and is not legal or tax or financial advice. Any action you take on the information in this webinar is strictly at your own risk. There is a very high degree of risk involved in trading. Past results are not indicative of future returns. Capital Growth Traders assumes no responsibilities for your trading and investment results. Now, in saying that, feel free to drop comments. Feel free to ask questions. I'm more than happy to ask questions around anything. So, yeah, the people that don't know me, just a little bit about myself. I'm a proud father of two boys, Riley, who is 9, Jace, who is 5. I'm an ex-fly-in, fly-out construction worker. Okay, so I was working away for over 11 years, 10 or 11 years, and I basically hurt my back and I couldn't go back to fly in, fly out. So I learned a skill in trading and I started to get very good at this and I started helping other people. And now I've helped, over 4,000 students successfully in my time of teaching people. I also didn't pass high school. I'm an international trading educator. We've got students all around the world. We teach people in America. We teach people in New Zealand. We teach people, in Australia. We teach people in England. We've got students in South Africa as well. So international trading educator, speaker, and seminar leader. I'm a self-made millionaire, full-time funded trader, and retired at 30. I've trained over 4,000 students successfully. And I'm an NLP master practitioner. This is a little bit about myself. We've got my young fella at karate. I've done a lot of construction work, climbing transmission towers, building gas plants and everything around those sort of things. But now I can spend more time hanging out with my family and kids and doing what we want to do, right? And that's what it's all about. So today, just very quickly, I don't like to fill things with fluff. I don't like to drag things out. I'm a very straight down the line type of person, and this is how we teach, okay? So today you're going to be learning the unspoken truths of support and resistance in trading, mastering the art of drawing support and resistance, streamlining your charts by eliminating unnecessary lines, timing your entry at support with accuracy, buying at the optimal moment to capture market reversals and vice versa. Abundant charts and illustrations to assist you in mastering support and resistance. Now I'm very hands-on, so I'll be showing you guys live charts. I'll be showing you guys some trades I took last night to achieve that type of money that I made. So let's get into it. And yes, I am a little bit sick today. So support and resistance explained. So support is an area on your chart where buying pressure could step into, push the price higher, just like this. So price is coming down. We've got that area of value, which is what we call a support level. So this is where people think this asset is worth this amount of money. So people start to buy it, right? And then all through the charts, acts like a magnet, and price will come in back into these very similar areas. This is why I like to call them an area and not draw a specific line, okay? Because when price comes into that area, what do we want to see? Then we take action if we see what we see. Resistance is an area on your chart where selling pressure could step in to push the price lower. As you can see, price is coming up into this area here, and we start to get rejected. So people are saying this asset's worth too much or expensive. So people are out either, selling off, or they're taking their profits, or they're starting to short the market here. This is why price starts to push down. So when support is broken, it could become resistance and vice versa. So as you can see here is a support line, price bounces off, and then there is a big bearish candle that breaks support. This now, potentially can turn into a resistance area. But what we want to see is that we want to see our candlestick confirmation pattern. So the wicks to the top side, we want to see, bearish engulfings. We want to see things that are showing that there is weakness and sellers are in the area to short. Because depending on what way the trend is, if we're in an uptrend, this could be just a liquidity grab and pushes back up and then reclaims that range or that zone and then pushes back out into the higher time frames, okay? So we don't want to get stuck on that side of things. So we're always waiting for confirmation. And this is where, the support level here will then become the new resistance. And then same thing here. We've got the resistance level. Price comes in, gets rejected. Price comes in, gets rejected. Then price finally breaks through. And then it will now turn into that new support. But we're looking for our confirmation. So wicks to the bottom side. Buyers are in this area showing, bullish engulfings or powerful where buyers are pushing through, right? And like if price breaks through resistance, through that support level, and it can grab that liquidity and then push out, it's the same thing here. Price can break through, then come back down, retest, and then reclaims this, and then we can short down. So just be careful of your confirmations. You need to understand your confirmations before taking entries of just one thing. So let's jump into some examples on the chart. All right, as you can see here, we've had Bitcoin in a 4-hour range, right? We've had a support level down here, support level here, and resistance here. So price was coming into this area, getting rejected, price coming in here, getting rejected, price coming in here. We've had that liquidity grab, and then we broke it underneath. So this is what I was talking about. And then we dropped, okay, back down into a support level here. Now we can see that price is breaking above here and looking pretty powerful, but we just need to be watching what we're trading into. However, we've created that new high low, and it looks like it's gonna, push out. So understanding just basics of support and resistance, if we get our short tool and we do this, right, all the way down here. So if you guys can see this, it's a 4.29 risk to reward, which means every $1,000 I risk, I'll make 4,290 USD. Now, this only took approximately, 1 day to play out. Now, a lot of people say they don't have enough time to trade, or they work too many hours in the day to do this, right? But at the end of the day, if we can understand key levels, we don't have to be sitting in front of the iPad or the computer 24 hours a day. We can set our alerts, and when price comes to these areas, then we can check and see if we want to take these trades. So, it might only take you 5 minutes to place that trade, and then you can go off and on your day and do your own thing. Okay, so if you understand that, drop a comment. But I just wanted you guys to ask yourselves, how long do you think it would take you to make 4,290 USD, which is around 6,000 Australian dollars? Okay, would that be, you know, a 2-week thing, a 3-week thing, 4 weeks to make 6,000 Australian dollars? Now you got to put that in context. If this takes you 6 to 12 months to learn, and you can start to make, you know, one trade of these a day or one trade a week, you know, you're definitely going to be well in front of your job, right? And way less stressful. So you can see here, yep, we'll get rid of that. But you can see here, I will color this red. So it's red is like rejection and green is for go. So you could have played this 1, 2, 3, 4, 5 times, making around that $20,000 mark through this whole range here. Pretty simple stuff. And now we've got the breakout retest here, big wicks to the bottom side. And now we're going to get that push out, hopefully. If not, back retest and then short backs down. So how to draw a support and resistance in a ranging market. Identify the range and draw horizontal lines at the top and bottom of the range. Okay, draw a horizontal line at the level where price is bounced off of the bottom of the range multiple times for support. Draw a horizontal line at the level where price has bounced off the top of the range multiple times for resistance. And number 4 is fine-tune the lines by adjusting them to fit price action, or we can zone them. And number 5 is use the lines to trade by watching for potential reversals when price approaches the support or resistance lines, okay? So let's jump on to some examples on the chart. Same thing here. We've got the Bitcoin. We've got that nice 4-hour range. All right, this is the extreme lows and this is the extreme highs, and looks like we're breaking out. The EMAs are crossing. Now, that's it. So we've got price getting rejected here. We get injected here. Then it's getting supported with this wick here. You can see that. Same sort of thing here. Area of value. We're getting held here, held here, held here. And now we're creating those high lows, showing that, you know, buyers are pushing price up. Now it looks like we're breaking out. Let's go and have a look at another example. Let's look at some silver and gold. Right. Same sort of thing here. We've got that range. We've got support level here. We've reclaimed it. We've got resistance here. We've bounced off here, bounced off here. We've created a continuation pattern. Then we've rocketed it out. Same thing now. We've got a support level here, and we've hit resistance up here. Pretty textbook stuff, pretty easy stuff. This is where I made that 22,991 USD trading gold and silver. Very, very easy concept. So if you can understand this sort of stuff, then, you know, you can be well on the way of trading and having your financial freedom. So same thing here. This is gold, right? We've got that level over here. We've got that support level. I took an entry here, 6.28. So every 1,000 USD on here would make 6,280 USD dollars. I had a few more dollars on that than that, but as you can see here, pretty powerful stuff. We've broken. Yeah, I'm working. See ya. So basically, we've had this area of value here broken. We got the wick, big wick to the bottom side. I've taken an entry here, and then we've pushed out. Next section. Let's have a look. So how to draw support and resistance on a trending market. Identify the trend. A trend market is characterized by a series of high highs and high lows in an uptrend, or lower highs and lower lows in a downtrend. To identify the trend, look for the series of highs and lows that are consistently higher or lower than the previous ones. Number 2 is draw the trend line. Once you have identified the trend, draw a trend line that connects the higher lows in an uptrend or the higher lows in a downtrend. Okay, So start from the first low in an uptrend or the first high in a downtrend and draw a diagonal line that connects the subsequent higher lows or lower highs. Draw the support and resistance lines after drawing the trend line. Draw the support and resistance lines. The support line is the level where prices historically bounced off of and reversed back up in an uptrend, or where prices historically bounced off of and reversed back down in a downtrend. The resistance line is the level where price has historically bounced off of and reversed back down in an uptrend, or where prices historically bounced off of and reversed back down in a downtrend. Pretty wordy. Fine-tune the lines after drawing the support and resistance lines up. Fine-tune them to better fit the price action. Look for areas where price has made multiple touches on the support or resistance lines and adjust lines accordingly. The more touches a line has, the more significant it is. And number 5 is use the lines to trade. Once you have drawn the support and resistance lines, you can use them to identify potential trading opportunities. Look for price to approach either the support or resistance line and watch for price action signal that indicates a potential reversal. For example, if price approaches the resistance line and forms a bearish pin bar in the uptrend, this could be a sign that price will reverse back down. Let's jump on the charts. Let's go back to Bitcoin here. So if we draw some trend lines, right, as you can see here, whoop, 1, 2, all this area here, right? It's just been respecting that trend line. 3 and 4. This is what we call a stacked area, where it comes in intersects with another area of value. So a stacked area, so more than 2 lines, 2 areas are joining, right? So we've got support area and we've got the trend line running through there. So 2 different types of traders are looking from this area to trade from. So this is a pretty powerful area here. And as you can see, we've pushed out pretty solidly, okay? Matched with this push from here and then push from here. So yeah, this is how we look at trend lines. 1, 2, 3, 4, 5. So this is a pretty significant trend line, and you could just keep drawing these, and then eventually it'll come back and float back into that trend. So just a quick recap. Support refers to a level on your chart where buyers may enter the market, while resistance indicates a level where sellers may enter. And if a support level is breached, it may turn into a resistance level and vice versa. For a market in a range, you should identify the highest and lowest points to draw your support and resistance levels. We always say don't diddle in the middle, okay? Don't diddle in the middle. Always identify your support areas and resistance areas on the furthest points, so then you can have the best outcome. In a trending market, it is advisable to pay attention to the most recent 2 or 3 swing points to draw your support and resistance levels. Any questions around any of that? If you're interested in learning how to trade, if you're interested in looking at making money, financial freedom, building your foundations, right? We run these webinars live in our Unchained community. So on Facebook, all you need to do is jump over to Facebook, hit the link, and request access, and we will give you access. Thank you so much. Hopefully that helps you not get wrecked in the market, and I'll see you guys on the next one.